So employees are expensive and they're a big liability, both contingently and currently. We try to teach our clients that when payday comes, they think in gross pay, not net pay, because they have to pay that withholding in a fairly short period of time. Usually, some employers within 3 days of payday, most employers by the 15th of the month following the month you withheld. So a lot of employers say, I don't want that responsibility, let's make them independent contractors. There are risks to that, and there are places where it works. If someone's on pure commission, it works. If they're a salesman for you and they only get paid if they're selling, then they can be an independent contractor. An independent contractor cannot supervise other people. Supervisors have to be employees. You cannot typically have independent contractors doing the same work as one of your employees. So usually the work that you're having independents do is distinctive. If you ask the IRS, should someone be an employee, it's similar to asking the Pope if you should be Catholic. The IRS prefers that people be treated as employees. They get their payroll taxes quicker, they get the withholding money sooner. Most small business, self-employed people are paying last year's income with this year's money. They're usually behind, they're usually on an installment agreement. There's more collection effort for the IRS, so they want people to be treated as employees. The IRS has 20 factors that it considers to whether or not you're going to treat someone as an employee versus an independent. They basically focus on control. Who's setting the hours, who has the investment in the equipment, and does that person have any rights on termination? And it's the terminated subcontractor or the terminated employee that typically causes the most problems. They're the disgruntled one, and they're going to raise their flag and saying, hey, I wasn't treated right. Or the independent contractor is going to go and want to collect unemployment, and you're going to say, well, he wasn't an employee. And then you're getting scrutinized by the Department of Economic Security, and they claim versus the IRS that they are the sole judge of whether someone is an employee. If someone was treated as an independent and they're later found to be an employee, it creates a lot of penalty and interest. They will come back and treat those payments as if they were salary. They will charge you FICA, both employee and employer side. They will charge you late payment penalties and probably negligence penalties for not reporting it correctly. It becomes a very expensive process. If someone is determined to be an employee and you have a pension plan, it could disqualify the pension plan, or you may have to contribute to the pension plan for them as well. So that function can either disqualify your plan or increase your contributions to a plan, and this is for somebody who's already left. So it's very important to classify them correctly as an employee or an independent contractor and treat them consistently once you've done that.